Hi and welcome, Colin Davison. Today I'm reporting to you on the subject of IR35. IR35 affects contractors. It's affected contractors for many years, and it's something which, by and large, you should, by watching this, you need to be aware of how it can affect you and what things you should put in place to ensure that you avoid IR35. So, before I get into too detailed, I wanted to bring attention to you a leaflet I've got over here, which is one of our preferred fee protection insurances. It's called a fee protection scheme because you're not entitled for us, because we're not an insurance company, to sell you insurance itself. But essentially it covers you for a variety of different support help if you were to get inquired into. Okay, so what is IR35 and how does it affect you? Well, IR35 is a system, a set of rules whereby someone who works and deals and operates like an employee must indeed operate and unfortunately tax very similar to an employee. It's not all as bad as it may seem. There are some advantages in being within IR35, in other words, applying the rules and still working for yourself through a contracting company. And I'll briefly explain you that, some of the good news if you were to be caught by it. First of all, because you've got very few profits left over, your corporation tax bill, which you pay 9 months after the year end, will be very small. Why is it very small? Because we take your top line income, we deduct what's known as allowable costs, and we go through some of those in a separate webinar. Beyond that, you then have a 5% allowance, which is intended to cover for training costs, but it's there to be used if you use it or if you don't. Below that, we then have to pay gross and employer's insurance, and of course it's therefore 95% of your profits, as opposed to what we would otherwise determine as being a much smaller figure. So your salary is going to be fairly large. It's going to be very similar and very high level to what your income is. But so it's not all that bad. You have got that extra 5% to allow for, and you are allowed those allowable costs, which you wouldn't be granted or entitled to as an employee, despite it intending to replicate the same. There are some advantages there, and when you look at the webinar on allowable costs, you'll understand what that is. So, what rules do you determine whether you're self-employed or whether you're employed? In other words, whether IR35, the fear that most contractors have, affects you or not. Let me talk you through the different tests. First of all, and I'll go through these in order of importance because the latter ones, in essence, are not so vital to be aware of. The important one is the ability to substitute. A self-employed person will be able to substitute whoever they like to do the job. So if you rang up and you wanted to have a plumber to come out to fix your tap, you would quite happily cover anyone that came in overalls and knew what they were doing, and would report it to be the same as the company that you rang up. You would probably get a bit surprised if it's a complete stranger, but generalised there will hopefully be a plumber that does the job, and that's what you're going to pay for. So the ability to substitute whoever you like is important. Most contracts, IR35 friendly, in other words that will be outside the rules, must have the ability for you to contract whoever you like. And of course, it's no good having a contract. You should also demonstrate that you do that. So don't just leave it to chance that someone, a piece of paper will be enough grounding. Please do take note. You must go and execute that degree of substitution. Otherwise, you've lost your big advantage to say that you could do that. The second component, and one which is equally as important as the first in some respect, is the ability to take financial risk. And very few contracts unfortunately have this. Financial risk is the ability that you make a much larger profit or potentially make a loss. and yet most contracts are day rates, hourly rates, where there's no risk. Whether you are waiting on a particular line of inquiries that lead up to your job starting or not, you don't care because you're getting paid by the day. So the fact is that a factory in China or a research and development that affects your job is delayed, well then that doesn't affect you because you're just paying by the hour. So you've got to get some sort of ability of financial risk into your modelling for your pricing and your contract to be properly outside IR35. Don't forget there are a series of 5 different tests, so you could argue that on balance these others outweigh that, but practically that's very difficult, and I'd rather you are in a black and white scenario rather than a grey area. So clearly you must get some sort of financial risk into this. Now I've seen that in practice by having a contract that gives you the ability to say that if such and such job's done or another job is done, you've got it covered. So that's number 2. For the third component, it's the ability to get benefits as an employee. Now clearly that will be something which you're probably unlikely to be in an issue with if you're arguing for not being self-employed. So you're not going to be getting the pension rights that a colleague in your employment next to you would be having. And then 4, it's very straightforward. 4th component is the ability for you to report to a manager. If you're reporting to a manager, then you're more likely to be an employee. If you're reporting in the form of a formal report to a project manager, and you're not supervised on any degree on any day-to-day basis, then there's definitely an argument for you saying that you're on your own, you can do what you want. 5th component, and it's one which is often very difficult to get in place completely, although you would have arguments for this, is equipment. When you, the plumbing scenario earlier, when you want to get your tap fixed, he doesn't arrive and say, look, where's your tools, mate? You expect him to arrive fully clothed and right tools in his bag. So in the same respect, if you're self-employed or employed, you're going to be using your own tools. Now that can be very difficult because most corporate environments have a very tight IT policy, and the idea of bringing in a laptop or bringing a laptop, connecting it to their server, is be something which would be completely no-no. Most will at least allow you to get in your own laptop and such, so therefore you'd have to argue that you need to bring that in. Why? Because you've got all your tools that you use. Just like the plumber, you use your own processes, your own manuals from previous jobs, and it's important for you to carry those around with you. You're going to possibly be copying and pasting components of things you've done in the past, but that's what people are buying you in for. Remember, there's contacts on there which you don't have on your corporate database to enable you to possibly doing a better job than you otherwise would be. In the same scenario, financial risk on the plumbing side, let's mention the analogy there, you're paying for a job to be done. If that job doesn't get done, you're not going to pay for it by and large, you're not going to pay for a leaking tap that's still leaking. So bear that in mind when you cover the financial risk argument. So we covered 5 tests there. I'll go through those in summary. First, I mentioned about financial risk. That you must be able to substitute and financial risk the whole thing. So you put someone else in place, you make a profit when you need to, or you make a loss. Third component was the ability to be treated as an employee, like having benefits. That won't be a big issue for you. 4th component is whether you're reporting to a manager and operate very similar to an employee, and that will include signing in. If you're signing in as a visitor, like other visitors will do, that's an important thing to do. And if you get a badge that's very similar to an employee, it may have the word contractor on, but really is it any different to an employee? You have to cover that. And the final component is equipment. Do you use your own equipment, or are you expecting to turn up on site and say, please let me give you your tools? If I turn up on site and I'm not necessarily going to be bringing in my own Sage software, so do bear that in mind. There is going to be components of what you are expected to do anyway, as a drill anyway. So it's on the balance of those arguments that you need to determine whether you're more like an employee or more like to be self-employed. Self-employed, you would then, the argument would be you'd have a low salary, possibly as low as a minimum wage. Technically you can't go any lower than that, then of course if your minimum wage is that you're a part-time worker, in which case you maybe don't get away with paying no tax and national insurance. But clearly, if you're not a part-time worker, you're working standard hours, your minimum wage legislation will bring your income level up to around 11,000, 11,500. So be aware of that when you want to inform your accountant of what you should be recording. Okay, so that's Colin Davison reporting on the long subject of IR35. I hope that you're now going to go away and have some better idea whether you're in or out, or if not, you're still confused, then drop me a line. I'd love to hear from you. It's Colin Davison at Cranleys.